Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to go into public companies, the private equities, the M&As, all of the deals, including investing, and the 13 things that you need to know when investing in cannabis stocks. On the line with us is Dan Kimmis, our CBD correspondent with Good CBD Products. So public cannabis companies took aim at private entities, closing 8 transactions last week. So the number of mergers and acquisition deals involving public companies as acquirers continues to outpace private ones. So the percentage of overall M&A transactions, that's mergers and acquisitions, involving public buyers is slightly lower in 2019 than it was last year. But I think there's a lot more money involved this year. So in total, 233 M&A transactions have been completed so far in 2019 versus 185 last year. So there are more, and it is more money. So looking at some of the capital raises last week, Centennial Wellness, a CBD startup in Portland, raised $91 million in both equity and debt financing. So this is the interesting point that Centia was founded by former executives of Cura Partners. So a company also based in Portland that has a strong presence in the West that's had $800 and $900 million acquisitions recently. So this was acquired by a Massachusetts-based Curaleaf in a deal worth roughly 1.27 billion Canadian dollars at the time it was announced. That's 949 million US. So I'm just going to throw it out there that that's a conflict of interest. I expect shareholder lawsuits. That's my opinion. You can't just have former partners buying each other out for billions. It's just that valuation is going to, we've already seen lawsuits. I think Canopy had a decline in their stock price and shareholders sued them. Like, that's the whole point. Stocks go up, they go down, and you take on that risk. But apparently you can sue somebody for any reason. I think that this is definitely a little bit too incestual, if you will. And so anyways, moving on to Toronto-based Soul Global. They increased a stake in Heavenly RX through a $24 million investment, bringing the total ownership of the CBD wellness company to 44%. And then wrapping up the M&A deals that closed last week, Ohio-based Green Growth Brands completed its acquisition of Florida Springs Oak Greenhouse in a $55 million deal and allows Green Growth to get a foothold into the state. Then there was Cannabis Capital of Vancouver, British Columbia, and Phoenix-based multi-state operator Forefront. We've had both of them on the podcast. Jerry Daraviani with Cannabis Capital spoke to us about automation, and then Hunter Holloman of Forefront talked to us about some terpenes, the business, the investment, and everything in between. So their planned merger is valued at just under $500 million. The combined company is now trading as Forefront Ventures on the Canadian Stock Exchange.
Geez, Chronic, if we slow down for just a second, count the number of deals, right? Depending on how you look at it, it's basically one a day, kind of, right? I mean, sure, it's a little fractional math, but it's like, yeah, there's been, 180, 200 days in the year so far, right?
233 deals.
Look at that, right? Insanity. And again, in the end, it's kind of like Highlander, right? So it'll be interesting to watch.
No doubt. So here's a Yahoo Finance article about investing in cannabis stocks, the 13 things you need to know. Number one is it's a fast-paced industry. So if you think that CBD is going to remain at $7,000 a kilo, probably have another thing coming. Knowing that it's fast-paced also means that things will come online that you didn't even know about. I believe that, maybe the next wave is cool, neat niche tools and ancillary products because of the massive amount of capital that's finally coming into the U.S. via California initially. I think will probably have a trickle-up effect to other areas, including Seattle that has a huge tech presence, a lot of creativity. And we need tools. We need new gadgets in the industry, and there hasn't been a lot of those. It's a fast-paced industry. Things go fast.
Oh, yeah. And, designer cannabinoids, right, or newly unveiled cannabinoids, that whole thing where, again, stuff that we didn't even talk about a few months ago, blam, when it's on the radar, you got to react fast because, again, we see it, the pendulum swings. The next thing you know, everybody's making, CBD or THCV or whatever. Yeah, you got to move fast.
Right. So Yahoo Finance goes on to say that derivatives in CBD are where the money is at. And I would definitely echo what you just said, Dan, is that those minor and rare cannabinoids are definitely where the higher margins are at. So as you see the dip in price for CBD, you see the transition to CBG that's already out there wholesale that I'm seeing. And then of course you'll see the CBN, THCV, and the other 480 known cannabinoids. So definitely going to be more options out there. So another option with Yahoo Finance, or the thing you need to know about investing in cannabis stocks, is that the U.S. is the industry's crown jewel. So although we're seeing a lot of companies go up to Canada and filing an IPO and getting all of that capital, you have to remember that California is the 5th largest GDP in the world. There's a lot of consumers in the U.S. We don't really manufacture a lot, but we consume everything. And so there is a lot of people in the U.S. that consume cannabis, and they're definitely not growing in Canada for the Canadian market. They're doing it for the 70 million people in Germany who have medical marijuana access via insurance and other countries around the world. So there are numerous ways to play the marijuana craze. So apparently, according to Yahoo Finance, one of the things that you need to know is that there's numerous ways to play the marijuana craze. So yesterday I was on a panel for the Chartered Alternative Investment Analysts Seattle chapter. I talked about how there's ways for the retail investor to get into exchange traded funds, look at some of those, as well as a 2x inverse and leverage ETF that moves twice as fast in either direction. And then the common ways that we see people play into the space is either with a production, a manufacturing, or retail license. Top investment vehicles being, the multi-state operators, and then data, and then marijuana lounges. So there are numerous ways to play the marijuana craze, that is for sure. But understanding that medical benefits of cannabis are still in question. The FDA had mentioned that Curaleaf, they can't make any claims. And so with that, a lot of people are buying recreational cannabis for medicinal purposes. And so that's going to put a little bit of a roadblock for CBD to be able to market and advertise yet without making claims. And so we're still waiting for FDA approval, I guess, for medical benefits that are still in question.
As your field researcher, right? So I spend a lot of my time in the field, and I'm really struck. When you go to someplace selling CBD or an event, the people you meet would give you a skewed perspective of public knowledge. When you go to a non-related event, a garden party that's just a normal garden party, I go and I ask, right? What do you know about CBD? Do you care? All this stuff. We have so much turf that hasn't been penetrated yet with regards to just public curiosity and such. So it makes sense, I think, to slow the whole thing down. I've seen CBD be represented as a cure-all. I've seen it be represented as something that, you can take today and will fix you tomorrow, and those sorts of things. And I just think that's a little presumptuous. I'm not really sure yet. I'm still learning. But ultimately, the FDA, they're not a big fan of stuff like putting it in your food, those kinds of things. It's not a good gig yet, Chronic.
Knowing that not every company is going to be a winner is important. That's why I recommended an exchange traded fund, or ETF. It's kind of a portfolio of companies that'll hedge some of the risk when companies go down, like CanTrust Holdings or Canopy Growth when the CEO was let go, but still being able to take advantage of that upswing when collectively they all move up. And then knowing that the nascent industry encounters growing pains, there's a lot of issues that you need to be aware of when you are investing in a company, knowing that the regulatory authorities could throw a wrench in the system at any time. Like we saw in Canada, they're not going to allow certain beverages and topicals that have THC. So anybody who thought that October 17th rollout would happen without any drama is probably wondering when they're going to start recouping some of that investment.
Again, the rhymes and the reasons of a newly open market, and then the process of regulatory enforcement, and then getting the rules together, and then getting the rules right, and what it means when you're a small business and every day counts, and you're a bureaucracy, and that takes years.
So we've seen a lot of deals that Canopy Growth threw together. Like I mentioned, they're CEO Bruce was let go, he put a lot of deals together. Those deals didn't necessarily generate a lot of revenue. And so most cannabis stocks are actually losing money as they're acquiring and expanding and scaling. You'll see a company making 80,000 in revenue that has a market cap of 80 million. That doesn't quite translate. I kind of look at that as the same as Amazon. I wouldn't be investing in that either. Any tech company that's buying their stock back just to bump up their price to earnings ratio is doing that so that the executives can get their bonuses. They should be reinvesting that. No shareholder is buying stock so that the company can go out and buy their stock back. The whole point is to buy stock so that they invest in future technologies to increase your return on investment. So a lot of these people are losing money. It is kind of a gamble, and that's why an exchange traded fund is a little bit better. And so it's not just about production. You got to look at, diversifying. Are you looking at multi-state operators or production? Because as a commodity, that price races to the bottom, which is why we mentioned earlier, getting into rare cannabinoids has a higher margin, and looking at, ancillary products as well.
It's a good gig if you can get it. CEO of a cannabis company when there's no mandate to drive revenue, it's all about expansion, right? I've met some of these guys, and some of them are really sharp and really good, right? And others, again, it's such a, fun kind of frivolous thing. Woo, we're acquiring you and all of this stuff. When in the end, it's all about commerce, right? It's all about revenue. Well, how much money did you actually make? And that's where we're seeing in this next wave. One of the big measures is, okay, what are you doing? What's on the books, brother?
There is a big shift. There's a lot of M&As that we're seeing, some mergers, some forced mergers or capitulation, a lot of stock issuance. And so that's diluting some of the initial capital raises. So that's one thing to be aware of, is dilutive stock issuances are common to raising capital. And that there is a bubble in Canada. So all next big things, bubble bursts. And knowing that in Canada, because of the limited access, people are going up there and buying shares of these companies, and it's speculative. Those producers, those LPs up there, are expecting price per gram to be at $1.70, and if or when they reach 7 to 8 cents a gram, that's quite the discrepancy there. And so a lot of them won't be around. The lack of availability in the U.S. to be able to buy companies is keeping those values a lot lower. It's a suppressed valuation by comparison to Canada. And so there will be a bubble in Canada. There will be a transition into the U.S. And so I think that there will be a huge increase in the investment in California, like we've mentioned. They only had, I think, 5% less than the other states by comparison of capital flow, and now it's just more. And I think we even predicted that was going to happen. And so as the Canadian bubble bursts, I think that's going to transition into a lot of opportunities in the US. But in terms of investing, I think that a limit order is a must. So if you are buying these stocks either over the counter on peak sheets or through the Canadian Stock Exchange or the couple of options you have on NASDAQ, you want to put it in a limit order. So a market order is just going to buy it at whatever price is trading. And the difference between the bid and the ask could be a huge spread. So the bid is what you can buy it for. And if you already have it and you want to sell it, that's the ask. And the difference is the equilibrium price that you can buy it at. Limit order means you're willing to put in a specific share price. And so that's a must. Otherwise, it could be skewed and you're going to be buying something at $200 that we saw with MedBox. Look at the history of MedBox, ticker symbol MDBX. It's no longer trading, but it was a pump and dump scheme that went from 20 cents to $200 because people didn't probably put it on a limit order and just were able to buy it all the way up to the top. It's not how pump and dump schemes work. But anyways, limit order is a must. And then when investing for the future, not the present, you got to look at who's going to be around, right? So if you understand that some of these Canadian LPs are trying to get $1.70 in perpetuity, and maybe you also believe that the price wholesale could drop to 7, 8 cents like we've seen here on the West Coast, maybe that's something that you want to invest in now, but not for the long term. And so it's a strategy. You can invest for the future, not the present, or just play the game as it is.
The recurrent theme that we see is oversupply rapidly. It's a commodity. And until the market balances, there's so much opportunity and risk jumping into that teeter-totter, right? And this is where, again, with what we've seen in Oregon, massive oversupply, typical commodity space, you have a few places that grow something, bananas or oranges or corn, and then, you don't grow it everywhere. Sure, there's essentially, we'll say, regional grows, but ultimately, you can expect cannabis at some point. There's going to be a breadbasket of cannabis, and then there's going to be a bunch of small regional kind of, craft grows. And again, the path from here to there is going to be fraught with a lot of, destruction and businesses being essentially recreated and such. Exciting. And at the same time, certainly not for the faint of heart there.
No, a lot of volatility. So if you want to keep up with it, subscribe to the Talking Hedge. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.